biggest opportunity to create value at Ford since we scaled the Model T. The real competition is not legacy OEMs, but pure-play EV companies, including emerging Chinese players.
Many industry analysts believe that the supply of raw materials like lithium and nickel might only be enough to support half or even less of the commitments all the automakers have announced through 2030. We aren't leaving that to normal business as usual. Our Model E team has been operating very differently. They move with speed, creativity to secure these materials, and the teamwork to get deals done is in days, not months.
All this effort is just a start. Ford has a great momentum built up to secure the raw materials needed to support our ambitious EV growth plan.
Welcome back to Rockstock Channel, and thanks for checking in. Today's video focuses on Ford's recent updates on their battery capacity and raw materials sourcing plans to meet their target of 600,000 EV run rate by 2023 and 2 million EVs by 2026. After a few minutes of my introductory commentary, the remainder of this video excerpts key sections of a detailed presentation and insightful Q&A from Ford's recent webcasts. As a reminder, it is my opinion that the niche upstream raw materials powering Ford and the broader energy transition is one of the key secular investment themes of our time. The vast majority of my investments are in equities in the upstream supply chain, miners, processors, and developers. Like Tesla stock several years ago, investors who educate themselves about these specialized commodities generally, and individual companies in particular, have an opportunity to accumulate life transformational wealth. Please note, I am not a financial advisor and nothing I say should be construed as investment advice. Please do your own research and read the disclaimer on RK Equity's website, rkequity.com. Of all the legacy auto companies, I've been most impressed with Ford and its CEO, Jim Farley. Unlike many of his peers aiming to launch a large amount of models, some low volume like the GMC Hummer, and many under new electric brand names like VW's ID or the Cadillac Lyriq, Ford is focused on just 3 models, but they are the most iconic brands in their most important high-volume segments: the Mustang Sports Coupe, the F-150 pickup, and the E-Transit commercial vehicle. Jim sees what's underway in the auto industry as the biggest transformation in 100 years since Ford's Model T. That's a big statement. And he sees his competition today more from Tesla, Rivian, and Chinese EV makers than traditional ICE competitors like GM and VW. I've talked frequently about the need of a return of the concept of Fordlandia, the Model T time in the 1930s and 40s when Ford owned iron mines and rubber plantations to guarantee supply security for steel and tires. Other than Tesla, Western OEMs have been asleep at the wheel, using a phrase from Pilbara Minerals' Ken Brinsden, comparing to China's auto industry, which have secured the whole supply chain. But Ford is waking up, in my view, and starting to make up for lost time. Security of supply and localization of supply are now a major focus of all EV and battery OEMs. I consider myself a globalist. I studied in London in college, worked in Eastern Europe soon after the Berlin Wall fell, and generally have been involved with emerging markets in all corners of the world for most of my career. The geopolitical crosscurrents contained within the lithium battery metals industry are fascinating to analyze and interpret. I have great respect for the long-term vision and business acumen of China and self-made billionaire entrepreneurs like Ganfeng Lithium's founders. Deglobalization is becoming fashionable. COVID, Russia and Ukraine have put into stark relief the importance of diverse, resilient supply chains. Just in case is the new just in time, to steal a line from my friend Robert Friedland. Nevertheless, I believe China-USA interdependence is likely to increase, not decrease. China is the largest auto market in the world, the USA number 2. Tesla, Ford, GM, VW are all global businesses. They have massive presence both producing and selling into China. CATL and their innovations with LFP chemistry are now too big not to scale with, as Ford demonstrated with 2 substantial announcements alongside their Korean suppliers LG Energy Solutions and SK On. Will the emerging Ford-CATL strategic partnership be a joint venture like Ford-SK On? Could their North American LFP plant be welcomed in the United States? Or will it be in Mexico, where the Mustang is produced? Or Canada? Watch this space. America has two of the world's Tier 1 lithium majors, Albemarle and Livent. Both are expanding capacity aggressively where their largest customers and lowest costs are, China. As fiduciaries with first responsibility to their shareholders, this makes complete business sense. In the 13 years that Archaea Equity has been advising lithium developers, our principal focus has been on counterbalancing China dominance, North American and European supply to support North American and European demand. But as Rodney and I keep saying, the fastest way to get more lithium units to feed current and near-term demand is for ex-China spodumene mines to process their materials where the only capacity currently exists, China. Ford's first and only check, in agreement to provide debt to Australia's Liontown in return for 150,000 tons spodumene, left unanswered where this spodumene will be processed. No doubt it will be in China for much of this decade. In my presentation at the Fast Markets Lithium Conference last month, I included this slide articulating a path to North American lithium independence. We have had the privilege of advising and investing in a large number of the North American companies on this slide over the past decade, including Piedmont Lithium, Lithium Americas, Ioneer, Compass Minerals, North American Lithium, Nemaska, Critical Elements, Frontier Lithium, and E3 Lithium. In the last lithium boom cycle in 2015 and 2017, demand was much more uncertain and was predominantly China-centric. There were too many projects chasing too little capital. North American projects largely got sidelined by Australian spodumene converted in China, SQM's predatory pricing to gain China market share, and China's Belt and Road into Argentina. The US and Canada have the potential in the roaring 20s lithium decade to achieve relative lithium independence. In a similar way, we achieved some oil and gas independence through aggressive exploration and development and the application of new technology. DLE and new clay flow sheets could be for lithium what horizontal drilling and fracking have been for conventional and unconventional oil and gas resources. Albemarle forecast the global lithium market to be 3 million tons plus sometime around 2030. North American lithium supply is limited today to only about 5,000 tons from Silver Peak in Nevada and 15,000 tons chemical processing in North Carolina. I see as a big, hairy, audacious goal for the USA and Canada to achieve 1 million tons or 30% of a 3 million ton market in 10 to 15 years' time. This will require $30 to $40 billion of investment. Sounds like a lot, but it's only about 1 year's CapEx by two oil majors. Like Ford, Washington, D.C. is waking up. A whole of government movement to motivate capital deployment is accelerating. There's also some promising language about permitting inside the bill just announced by Joe Manchin and Chuck Schumer. Ford announcing a large series of deals in process in and outside of America is a positive sign. But in my observation, some of the best companies and projects that Ford is no doubt aware of have not been ready to hit the non-binding MOU bid Ford has currently put on the table. Ford and GM and Stellantis and VW and BMW and Mercedes and Tesla will all have to do a lot more soon. A shout out to the Ford executives you're about to hear from: Marin Jaja, Lisa Drake, Annie He, and CEO Jim Farley. If you're listening, it's time to write large equity checks to development stage companies at parent or project level to lock in long-term supply and lower your costs. It's also time to use your Washington clout to coordinate with cheap US government funding to find the most important projects to get behind. As much as I'm a free market globalist, the playing field is unlevel with China, and due to capital markets and regulatory dysfunction in North America. Picking winners, the highest quality projects and companies with the highest quality managements and most advanced projects should not be that difficult to identify and cut deals with.
The Ford team delivered a very solid second quarter in a challenging environment. We achieved these results as we advanced the Ford Plus plan, which is the biggest opportunity to create value at Ford since we scaled the Model T. In today's hyper-competitive market, the real competition is not legacy OEMs, but pure-play EV companies, including emerging Chinese players. Now, we've been overwhelmed with the demand for our first-generation EVs, the Mustang Mach-E, the Lightning, and the E-Transit. We believe that these great new products will enable us to grab an outsized share of the rapidly growing EV market. This month, we expect to produce 14,000 EVs globally, and we have a clear path to reach a run rate of 60,000 EVs by the end of next year. And that will lead to a foundation to 2 million by late 2026. In fact, our anticipated growth rate in EVs through 2026 is more than twice what we expect for the global EV industry in total. Now, securing the raw materials to produce batteries at scale is critical to our plan. It's estimated that at best, 50% of all raw materials required to meet the combined announced targets for all EV OEMs is actually available, 50%. And this is why speed to securing supply is so critical and strategic. So is diversifying our battery chemistries to increase our flexibility, supply, and profit, and to support different customer use cases. Last week, we announced a series of MOUs, and we are working to complete definitive agreements where necessary. Our Model E team moved quickly to capture these opportunities.
We're investing over $50 billion in EVs through 2026. We're confident in our plan to deliver a global EV run rate of 600,000 units by late 2023 and a 2 million EV annual global run rate by late 2026. Mustang is the world's best-selling sports coupe. Transit is our global workhorse. We've sold 7.4 million of them around the world, and Ford F-Series pickups have been America's best-selling vehicle for 44 straight years. Lisa and Annie will walk you through what we're doing to secure the battery capacity and raw materials.
600,000 EVs requires about 60 gigawatt hours of battery cell capacity. We've now secured 100% of this capacity, both from our existing suppliers who installed incremental capacity and also by adding another battery chemistry. Starting next year, CATL, the world's largest battery producer, will provide full LFP battery packs for the Mustang Mach-E and the F-150 Lightning starting in early 24. LFP reduces our reliance on scarce critical minerals such as nickel, and at current cost can bring a 10 to 15% bill of material savings for the company versus the NCM. In addition to the incremental LFP capacity from CATL, Ford is leveraging long-standing relationships with LG Energy Solution and SK On to meet our battery cell capacity targets to support the 600,000 run rate. We have not needed to rely on newly built plants to support our near-term production targets. LGES doubled our capacity in its Poland facility to support incremental NCM cell production for the Mach-E and the E-Transit models. Meanwhile, SK On scaled NCM cell production beyond earlier planned levels at its Atlanta facility, and it's providing new battery cell capacity to us from its Hungary operation. Actions from SK On, LGES, and now the addition of CATL takes us to 100% battery capacity to meet our 600,000 EV run rate. Many industry analysts believe that supply of raw materials like lithium and nickel might only be enough to support half or even less of the commitments all the automakers have announced through 2030. We aren't leaving that to normal business as usual. Our Model E team has been operating very differently than anything I've experienced in my 28 years at Ford. They move with speed, creativity to secure these materials, and the teamwork to get deals done is in days, not months. That we've already sourced 70% of the battery capacity we need to achieve our EV product plans through 26. Today, we are announcing a second agreement with CATL. Ford has signed an MOU with CATL for a global strategic cooperation that will supply batteries in North America, China, and in Europe. Ford also has plans to install 40 gigawatt hour of LFP capacity in North America starting in 26, which is a full battery cell plant of capacity. We plan to use that additional capacity to complement our 3 previously announced battery plants in Kentucky and Tennessee, and those are part of the Blue Oval SK joint venture, which we officially formed last week. Battery cell manufacturing capacity is the foundation of our EV business. And to support it, we are now building out the supply chain, just as we said we would, going deeper than ever before to secure the raw materials that are necessary. We have direct sourced our lithium and nickel to scale battery production more quickly and keep the volumes and the cost more stable over time. In doing this, it meant considering new markets for us, new financing terms. It meant going and seeing, visiting areas around the world to understand true available capacities and creating all new supply relationships that we've never had before.
We want to share that Ford is working to further localize the processing of key battery material in North America. We're securing a North America cathode production facility with EcoPro and SK On. This will be a key high-volume cathode producer for us. And we will announce a second cathode production facility later this year. On our raw material localization efforts, Ford has struck an agreement with Vale Canada to explore potential opportunities across the EV supply chain. We have also signed several North America projects, including Compass Mineral for lithium in Utah and Syrah Resources for natural graphite processing in Louisiana. Battery raw material is in critical supply for the entire EV industry. Ford is taking an important first step to secure raw materials directly from mining companies. And we are building a new EV supply chain that is geographically diverse. On the lithium side, you will recall last month, Liontown Resources announced an agreement with Ford for up to 150 kilotons of spodumene from Liontown's project in Western Australia. Ford is also exploring a significant lithium offtake with Rio Tinto from its flagship Recons project in Argentina. Rio Tinto understands the scale we bring as they provide aluminum raw materials for F-Series and some of our SUVs. On the nickel side, in addition to Vale Canada, we're exploring a collaboration with PT Vale Indonesia and Huayu Cobalt on Panoma project. Ford will have offtake rights for up to 84 kilotons of MHP nickel immediate product. We're also working with BHP on a multi-year agreement that could start as early as 2025. This agreement may also involve additional commodities over time. All this effort is just a start. Ford has a great momentum built up to secure the raw materials needed to support our ambitious EV growth plan.
Adam Jonas from Morgan Stanley.
Wow, really a lot of exciting developments here as we try to re-architect and onshore the supply chain. I wanted to confirm, do you have any binding contracts for raw materials with your partners yet? And if not, when they do move into binding, how do we think about the capital commitment? What portion of the $50 billion that you've allocated to EVs would be required to kind of co-invest with your materials partners?
I can't disclose how much of the $50 billion, but the capital is inside of that number that we reported, so I'll start there. We do have binding agreements. Some of them are binding, and we've announced some of those. The non-bindings, as you know, will progress fairly quickly into some binding agreements in the next couple of weeks and months. All of these deals vary. It's been interesting for me, at least, to learn this space. They're a bit like snowflakes. They take various forms of financing. Whether they're pure offtakes, you saw the loan, the creative work that we did with Liontown on the loan. All of them are intended to secure the capacity and also help control cost.
I think the Department of Energy and others in the battery industry have described the battery material market as essentially an OPEC of one, that country being China, where we're easily 75% of the upstream cathode materials and
refining is done there. So where is that work to do to make sure we can get that sensitive material processing here?
There is more work to do. I wouldn't say that we have 100% confidence that all of these can be localized, but you have to bring it here step by step. And there is no doubt there is more investment needed in the processing side of some of these raw materials. You know, that said, every step we can localize, we are. We announced the cathode facility with EcoPro that'll be in North America. I can tell you our second cathode supplier, we haven't announced it yet, but that will also be in North America. It was important, even though we're going to import those LFP packs from CATL for the Mach-E and the Lightning, just speed to market. It was the fastest way to do it. But it was really important that we localized that technology in North America and not be reliant on an import, which is why we're spending such time and energy on LFP in that 40 gigawatt hour plant. But we're very committed to do it. Frankly, our relationship, with the U.S. government and as Ford Motor Company, we're just going to educate as much as we can and make sure we can get as much help, through the process.
How are you going to get this all done from maybe a human capital standpoint?
Most of those deals that you saw, we did not have a lot of meetings about them. There were probably 4 to 5 key decision makers that needed to align, and we did that. We did it in days, not months. Supply readiness, we're not leaving that up to desktop work, WebEx meetings. We're going and visiting these suppliers, visiting the mines, visiting the processing. We need to make sure that they can scale.
Do you have an idea of what proportion of your raw material needs that you'll have to acquire yourselves?
Our first focus is for the Blue Oval SK joint ventures. We have the 3 battery cell plants we announced in the U.S. We have Tennessee and Kentucky with 2 sister plants. And then I think, we have an MOU we've signed with the Koch family and SK On for another plant in Turkey. So those are NCM plants. That's where we're focusing first on the nickel and lithium arrangements with SK On as our partner. But we're not stopping there. We're going beyond that to make sure that the other arrangements that we're making are also supported with some of the raw materials. We're targeting to have full control. We don't want to leave this to chance.